Thank you for joining us. My name is Jolene Olson. If you have any questions regarding your membership or the TechCharts website, please send your inquiry through our contact form that is located in the upper right-hand corner of our website. This and all past member webinars can be found on the member page under Premium Members, Educational Videos, Member Webinars. Thank you again for joining us today, and welcome, Aksel.
Hi, Jolene, and hello, TechCharts members. Great to connect again in this yearly webinar. First, I want to thank Jolene for the introduction and also for editing those presentations on a timely manner and making it available for all our members. Now, we're going to be going through the yearly review. We met a couple of months ago for our quarterly webinar. That was more of an educational series. This is more like to review the chart pattern statistics, the numbers, and how the patterns have performed during this period. It's really exciting because we have now completed a total of 6 years with the TechCharts membership service. And we have now compiled a massive amount of data with the chart patterns, those 8 building blocks of classical charting principles. So now we're going to go through them and see last 1 year's and also last 6 years statistics, and then also we're going to go into specific charts. All right, let's start with the all data. So the first table on chart pattern breakout signals from May 2017 till end of April 2023. We've always discussed the importance of rectangle chart pattern in our chart analysis, classical chart pattern analysis, how rectangle has been robust, be it the frequent signals we get from those patterns, the availability of this pattern, and also the success rate. Now you can see at the top of the list is that rectangle with its 62.5% success rate over 6 years period, 571 occurrence, and out of those 357 reached their price objective, followed by the head and shoulder bottom, 60.3%. Now I want to compare those to the average. So we have the total number of chart pattern breakout signals, 1,346. This is during the 6-year period. 797 reached their price objective, giving us a success rate of 59.2%. Now, if you look at those percentage success rates, we would like to focus on those that have beaten the average, which is the top 2, plus slightly around that number, head and shoulder continuation can be as well, around the average with 58.3%. So you can see that the head and shoulder varieties and the rectangle are the best performing chart patterns. So just looking at these statistics, looking at this table, you can come to the conclusion that when you have a symmetrical triangle or a rectangle, you would rather go with the rectangle due to its probability of success in the long run. Same can be said with the head and shoulder patterns. You would rather go with, if you have a descending triangle versus a head and shoulder bottom, it is, or head and shoulder top, you can prefer the head and shoulder varieties to the other chart patterns if you want to choose between those, given the success rates. Now, if you look at the following table at the bottom, this is the last 1 year's success rates 4 classical chart patterns that we've been analyzing. So May 2022 till April 2023. So April's data is included in this. So last day of April is in this table. Now you can see that the success rate for the past 1 year is lower than the average, which is something that we've expected. It's been a really challenging market environment where we had several false breakouts, choppy market price action, and that gave us 55.3%. Now, have we seen worse than this? Yeah, I'm going to just, in a couple of slides, we're going to look at the MSCI All Country World Index and over the past 6 years, how the market phases have changed and also how the pattern reliabilities have changed. So 55.3% is still in a better shape than, for example, a downtrend that we've experienced in 2018, where the success rate was around 50%. Now, something that I'm going to draw attention to as we also go through the chart patterns in the following slides, one of the frequent question that we get is where do we place the stop loss? How should we place the stop loss? Now, stop loss is something that we always say that this is a trading tactic and it depends on the trader's risk profile and how they want to manage the trade. So if you want to squeeze the most out of a trade given its chart pattern price objective, you would play it very tight. You would place the stop loss right below the chart pattern boundary after the breakout confirmation has been received, and you try to manage the trade accordingly. That would give you the maximum upside potential, maybe 1 to 4, 1 to 5, or 1 to 3, but no less than 1 to 2. So if you play it tight, you would be able to capture the most out of a breakout. Now, given that we're not discussing about stop losses and those success rates do not include stop losses, it is actually a price reaching its chart pattern price target or price reaching the chart pattern negation level. Okay, in between, stop loss is completely different. So for that reason, I have categorized each breakout and I said this is type 1, this is type 2, this is type 3 and type 4. So with type 1 and type 2 breakouts, if you play them with really tight stop losses, they will be able to offer you around 1 to 3 to 1 to 4 risk rewards, which I have also discussed in several educational videos under the premium section. Those will give you minimum 1 to 2, 1 to 3 risk rewards, and you will be able to manage those trades. Now, if you look at the type 1 and type 2 breakouts, let's go here. Okay, this is the last 1 year. We're going to review this again. I just want to show you how these are featured on the website. Type 1, type 2 are the ones that will not challenge the chart pattern boundary. You can see that 41.4% of them were successful breakouts and without challenging your stop loss that is right below the chart pattern boundary. Type 3 is with a hard retest, so 13.8%. So out of this 55.3%, if you're playing with tight stop losses, 41.4% of them is your universe, is your subset in terms of success rate. Now let's go back and quickly look at the statistics of this year. Head and shoulder continuation is again at the top of the list, though number of occurrences are not 10, so it is not very robust. So we want minimum 20 occurrence to have a statistically significant set. But if you look at rectangle, it's again above average with 57% success rate and 86 occurrence. 49 of them have reached their price objective, and we average is 55.3. So the top 4 of them, interestingly enough, this year symmetrical triangle ended up being at the top, but with 6 occurrence, it is not statistically significant. So the best one would be cup with handle, but again, rectangle would be one of the good ones in terms of chart pattern reliability. Now, when we're talking about chart pattern negation level, it is the minor low inside the chart pattern. So this is a symmetrical triangle. This is the significant low that we have. So that is the chart pattern negation, the level at which the chart pattern will be negated. This is a subjective labeling of a pivot point inside the boundaries of the chart pattern. While chart pattern negation level can be the minor low, your stop loss can be slightly below 13.9 levels, which allows you to capture a bigger upside here. Now, this would be considered a type 1 breakout with its strong breakout without pullback. So here, the minute that you enter and you place your stop loss right below the pattern boundary, you have easily 1 to 2 and 1 to 3 upside potential all the way to the price target. So given the last 1 year's numbers with 41 point something percent, what was it? Let's go and have a look at, to be precise, 41.4%. So that's your subset of the successful breakouts that didn't even challenge the chart pattern boundary. The level of breakout confirmation, we're following the 3% Edwards and McGee breakout confirmation guideline. Though in the educational videos, I have also discussed a stop limit entry, which once you have that breakout confirmation level, the gray line, you can always place a stop limit order around that level, which would get you in the minute that the price reaches during the session to that level. And then by the end of the close, the price will not be too far away. You can, if the price is not too far away, you can also execute the remaining quantity, which will give you a lower average for entry. That will basically help you to maximize the upside potential as well. So these are quick trading tactics we've discussed. Now, phases of market trend matters in finding chart pattern opportunities. Why is that the case? Because we are trading breakouts. Breakouts are basically momentum strategy. So once the consolidation is completed, you want to capture the trend period. And to be able to capture the trend period, you should have a directional move. Now, if you look at 2017, a massive directional move gives you a 71.5% success rate in terms of chart patterns. So that means stocks that are completing their consolidations are immediately running their price targets because it's a momentum-driven market. Now, when you have a choppy market, especially a bear market, which is trending downwards, but remember, bear markets have wider swings. Corrections are sharp on the upside, and that results in failed breakouts, failed breakdowns. So you can see that 2018 gave us a success rate of 50.5%, followed by 2019 initial strong trend, consolidation, and then another strong trend period gives us a 61.1% success rate, followed by 2020 a sharp move on the downside, which is something that we like to see because you want a directional move. So if you have short opportunities, this is the time, this is the market environment where price will immediately reach its price target, most of the stocks that are breaking on the downside, and then followed by a really strong upward move. The only catch here is this V reversal. So probably during this V reversal, the success rate was affected. even though this trend was strong, like the 2017 year 2017's move, here we ended up with 66.8% success rate versus 71.5%. Even though we had good trend periods, probably around this area, we had several V reversals that resulted in failed breakdowns. The following year, which was 2021, choppy upside directional move, but not as strong as the second part of 2020 or 2017, or even the two parts of 2019. You don't see that strong trend, so that left us with 54.9% success rate. 2022, 53.3% success rate. This is the year that we have been looking at, plus the current market, because we're looking at last 1 year data, May to April. So second half of 2022 and first 2 quarters of 2023 is the data that we're looking at in our year in review. So you can see that it is really choppy and sideways market that resulted in the 55% success rate. But as a year-to-date yearly performance of 2022, you can see the trend here, how the upward moves have been sharp, resulting in several failed moves. Now, if you look at this year, we had the first strong move from the beginning of Q1, followed by a pullback, and then another move on the upside. Even though we don't have many completed chart patterns so far, out of 32, 19 reached their price target, giving us a 59.4% success rate so far. But I expect that if choppy market environment continues, we will be somewhere around 55 to 59% success rate, given the past performances that we have seen in such market conditions. If this chart pattern that we're looking at, MSCI Country World Index, is a head and shoulder pattern, if this chart pattern completes on the upside and gives us a strong directional move, it is likely that this 59.4% will continue to 61, even 71% ranges with a strong directional move. So as you can see, phases of market trend matters in finding chart pattern opportunities and taking advantage of those breakouts by meeting their price objectives. Now, as I categorize these breakouts into different types, type 1 breakout, once the breakout takes place, this is your stop loss area. You can play it as tight as 585 after the breakout confirmation, and that gives you a good upside potential. As you can see, following the breakout, the price doesn't even pull back to the chart pattern boundary. So those are the type 1 breakouts that are categorized as on our table as breakout and runaway price action. Type 2 breakout, you will see that price breaks out and then pulls back to the pattern boundary without challenging the stop losses that you have below the pattern boundary. Those protective stop loss area is not even challenged, so the price reaches the price target, and this is considered a pullback. So this is type 2 breakout. All the numbers that you see under type 2 are those type of chart pattern breakout signals. Type 3 breakout can be a little bit even harsh in terms of pullback, so it can dip below the pattern boundary without reaching the chart pattern negation level, the minor low inside the pattern that's been analyzed, and then the stock recovers and gains momentum again to trend to the price target. These are type 3 breakouts. Now, when you're looking at type 3 breakouts, you should have a re-entry strategy, or you would tell yourself that once I'm stopped out from a very tight stop loss, an aggressive trading strategy that I'm applying, okay? So the protective stop is right below the chart pattern boundary, and you're trying to capture 1 to 3, 1 to 4 upside potential, but you get stopped out. So you make a rule, you say that I will not attempt a re-entry. That's also fine. Then you will be dealing with a subset of 47%, 47.7% over 6-year period. Okay, so that's going to give you the type 1 and type 2 breakouts as a subset to deal with. That is still a great number as long as you're able to capture more than 1 to 2.5, 1 to 3, 1 to 4 risk rewards, given that you're playing it with tight stop losses. So that's type 3. And type 4 breakout is the one that breaks out and immediately fails, reaches the chart pattern negation level, and doesn't even recover after reaching the chart pattern negation level. So that's type 4 breakout. Now, if you look at the last 1 year data here, out of, as I said, 55.3 success rate, we're discussing type 1, type 2 being at 41.4%. Okay, 41.4% is still a very good number to deal with, as long as your risk reward is higher than 2.5 to even more than 3, depending on how aggressive you want to manage those trades. Head and shoulder continuation being the top, rectangle with 57%, and you can see rectangles also success rate with type 1 and type 2. It is above the average of 41.4%. So if you take only rectangles, you're even dealing with a better type 1, type 2 percentages combined together. Now let's look at those examples, some of the examples from last 1 year. You will see a couple of interesting charts from Turkey. Now, obviously, the questions that we receive is about how do we access those different markets. One of them is dealing with a prime broker. Prime brokers have offering of multiple markets from one account. Unfortunately, I'm not able to recommend any brokerage services because we're not licensed. But when you type in and Google the term prime brokers, so many options come out, and you can run your own due diligence. Regarding countries that you cannot access via prime brokers, local brokerages are the best way to go with, but obviously they will have their own way of opening accounts and offering access to those exchanges. Turkey could be one of them, but if you find a prime broker that has access to this market, from time to time we capture some strong trend periods, and they can be really interesting moves at a time when markets are tough internationally. So this can generate some good profit. So Research is a logistic company, massive 2-year-long ascending triangle completed. This is a type 2 breakout. So the breakout confirmation chart pattern negation level is at a minor low. So if you want to play this with a tight stop loss, your protective stop is going to be right below 6.5. Okay, and breakout confirmation is the gray dotted line. Slightly above that, if you have entered this trade, it could have easily given you 1 to 4, 1 to 5 upside potential. Breakout, a pullback, and then continuation to the price target. This 2-year-long ascending triangle was completed with success. Type 3 breakout, we didn't have type 1 breakout on ascending triangles. So that's why I'm putting type 2 and type 3. So let's look at a type 3 breakout. What does it look like? So the minor low, 693 is the chart pattern negation level. And the breakout confirmation. After the breakout confirmation, stock pulls back. Probably all those tight stop losses got triggered, and those aggressive managed trades are have been stopped out. So if you have a re-entry strategy, that's your entry. Second time, the second attempt, with stops being below the lows of the hard retest to capture at least 1 to 2, 1 to 3 upside potential. So that's the type 3 breakout, where you see a breakout followed by a sharp pullback that dips below the pattern boundary. You can completely avoid a re-entry, and that would be still fine. As I said, you will be dealing with only type 1, type 2 subset. This is type 4 breakout. So once the breakout confirmation is completed, the stock pulls back, tests the boundary. It looks like a type 2 breakout till now. So the protective stops are still safe, and then rebounds, but fails there, retests again, and this is the move that gets you out of this chart pattern signal, and it reaches the chart pattern negation level as type 4 breakout. So this is classified as type 4. Now let's look at cup with handle continuation. This was another stock that from Turkey completed on the upside, a 7-month-long cup with handle continuation. This was a textbook move, and this was a type 1 breakout. So following the breakout, no pullback takes place. So if you're playing it aggressively here, 10.75 is the boundary, and you're slightly below that, and gives you an upside of almost 30% move on the upside towards the price target. So that gives you easily 1 to 3, 1 to 4 upside potential on this type 1 breakout. If you look at a type 2 breakout, similar cup with handle, but this time after the breakout, price pulls back to the chart pattern boundary. So stops below the chart pattern boundary are still not challenged, and the price following that pullback continues on the upside, reaching the price target and even exceeding the price target. Now, regarding trying to capture even more of the upside, let's say we reach the price target, what do we do to capture more? I have come to the conclusion that those stocks that are type 1 breakout, okay, are the ones that exceed the price objective. So it is best to play those names and not rush to take profits at the price objective. So try to ride those with some kind of a trend following method, be it the trailing stop or tighter, shorter term moving average, to capture a little bit more of the upside past the price objective. So if you have measured your price objective and your upside potential as 1 to 3 or 1 to 4 at the price objective, you can easily capture 1 to 5 by letting it go past the price objective to maximize the trend period. Now this here is a type 3 breakout. So the breakout takes place from a cup with handle chart pattern from Australia Brickworks, a 3-month long cup with handle continuation. Breakout confirmation is here. Following that, the stock rally is almost to the price target and then falls all the way back. Now, let's clarify something here. Those, what I'm discussing here is, you have a protective stop here, you've calculated, measured the price objective, and the price reaches the price target, or you get stopped out. So that's basically the subset of type 1 and type 2 breakouts that you're dealing with. So none of them incorporates any kind of ATR or moving average trailing stops. It is almost impossible to touch on everybody's strategy and find a common denominator here. Our common denominator is the chart pattern itself. How you play the chart pattern will totally depend on the tactics that you implement. What I'm trying to offer here is when we're looking at the chart pattern reliabilities, be it the rectangle or the head and shoulder continuation type, I'm trying to show you that around 47% of them are the breakouts that rally to the price target without challenging the chart pattern boundaries. So this is some really good information, really good statistics that we have compiled over 6 years data, and also obviously trying to capture the most of type 1 breakouts, trying to figure out what a type 1 breakout is, are our common denominators, plus how to identify the chart pattern, what is considered a cup with handle or head and shoulder pattern. Those are our common denominators. So this is a type 3 breakout. After the pullback, it dips below the pattern boundary, tests the 200-day moving average, and reaches the price target. Now, this is classified as a successful breakout that reached its price target. Because when you're playing these type of patterns, let us also clarify that there are not only traders, there are also investors who play those patterns with their chart pattern negation levels. So they're okay to carry those positions in their portfolios by just focusing on the chart pattern negation, because they are either running a long short portfolio, market neutral portfolio, and so on. So there are clearly so many different strategies and so many different profiles of TechCharts members that want to capture also this stock, and it hasn't negated its pattern, and also it stayed above the 200-day moving average and reached the price target. So that this considers to be a successful breakout for them. Now, another cup with handle, type 4 breakout. As you can see, once the breakout is confirmed, following that, we see a sharp reversal, try to rebound, cannot recover above the chart pattern boundary for a type 3 breakout, and then goes back to reach the chart pattern negation level, the minor low inside the pattern, and it's considered as classified as a type 4 breakout. This was a cup with handle continuation that failed. Now let's look at head and shoulder bottom patterns here. Head and shoulder bottom, as you would remember, is one of the reliable classical chart pattern. This was a silver equity, silver stock, mining stock from Canada, basic materials, 5-month long head and shoulder bottom, left shoulder head, right shoulder, breakout confirmation. After the breakout confirmation, the stock keeps going to the price target and reaches the price target without even challenging the pattern boundary. So considered as type 1 breakout. Type 2 breakout is once the breakout confirmation is received, it was a Japanese company, Yokohama Rubber, breakout confirmation from the head and shoulder bottom, pullback, stops below 1765 not challenged, even though chart pattern negation is still far. Here we're not challenging the pattern boundary, pulling back to the 200-day moving average, rallying to the price target. So that's type 2 breakout. Let's look at a type 3 breakout. The long-term bottom reversal still worked but obviously this was much deeper pullback to the chart pattern boundary, the neckline, that didn't negate the chart pattern, but still reached its price objective. So this is a type 3 breakout. Company from US, AA1, listed on the NASDAQ. Now let's look at a type 4 breakout on the head and shoulder bottom, 18-month long head and shoulder bottom, Canada real estate, left shoulder, head, right shoulder. This is a weekly scale price chart, breakout. Following the breakout, 2-3 weeks of strength, and then immediately the stock fails, pulls back to the neckline, falls below the neckline, and then reaches the chart pattern negation level. So this is a type 4 breakout that failed to continue higher. Any stops that you had below the pattern boundary were clearly triggered during this sharp pullback. Let's move to now head and shoulder continuation, a company from Turkey, left shoulder, head, right shoulder, a textbook horizontal neckline, breakout confirmation, stops below the pattern boundary, and stock reaches price target at 130. If I remember it correctly, this continued even further after the breakout after the chart pattern price target was met. So this is another type 1 breakout that you can easily ride past the price objective, which would offer more upside potential. The next chart is from Australia, QBE Insurance Group, type 2 breakout. Let's look at a type 2 breakout here. Breakout confirmation level. So the close above the breakout confirmation. Chart pattern negation goes to the low of the right shoulder. Tight stops are below the pattern boundary. Rebound, rally, and then pull back. Test the neckline, and then continues to the price target. So this is type 2 breakout that didn't challenge the pattern boundary. This was a head and shoulder continuation example from the charts. We have featured as breakout alerts. Stock from Hong Kong, head and shoulder continuation. This was a perfect example of a chart pattern that's completing at the same time as another short-term pattern, rectangle, but there is no guarantee that stocks will succeed from those type of breakouts. It was a rectangle as well. Rectangle met its price objective, but the head and shoulder continuation didn't. And this was a failed breakout as well. Even though we've reached somewhere in the middle of the price objective, high 70s, the price failed and reached the neckline, and then the chart reached the chart pattern negation level. So classified as type 4 breakout, a failed breakout. Now let's look at rectangles. I added two of each rectangle pattern, in type 1, type 2, type 3, and type 4, because we had many examples. So this is a banking stock from Turkey, 3-month long rectangle, breakout confirmation, price target 573, stops below 505, stock rallies, the price target passes the price objective to continue much higher. So it was a type 1 breakout. Another type 1 breakout is from South Africa, 10-month long rectangle, textbook upper boundary. Now, something that I want to mention here, stocks go through splits, so corporate actions. And when you're looking at the breakouts page, if you see a discrepancy like this, bear in mind that this is not a discrepancy. This is a stock that went through a stock split. Nothing has changed on the chart pattern levels, except the price levels have changed, but dividends were received. So, or stocks were received in return in your portfolio. So this balances out. So from a technical perspective, nothing has changed in terms of the breakout or the profit that you have captured in this stock. Now, if you look at the 10-month long rectangle after the breakout confirmation, chart pattern negation was here at the time 163 after the stock split 45. Price target was met at 60. Earlier price target was 212. It passed the price objective. Remember that this is a type 1 breakout. So with type 1 breakouts, price can exceed the price objective. Now let's look at type 2 breakouts. Ireland AIB group. It was a textbook rectangle, again 14-month long. Breakout confirmation. After the breakout, stock consolidates above the pattern boundary. So any stops that you have below the pattern boundary are not challenged. Price rallies to the chart pattern price objective in a couple of weeks. So this was also a strong move, and it's a type 2 breakout. Another type 2 breakout was a breakdown on the downside. So you have a 5-month long rectangle here below the 200-day moving average. 1, 2, 3 tests. Breakdown takes place. Chart pattern negation. Stops are above 305. Price pulls back to the pattern boundary but doesn't challenge anything above that, and then continues lower to test the price objective. So this was type 2 breakout that reached price objective and was classified as a successful move, successful breakdown, yes. US Papa John's, 3-month long rectangle. So you had the breakout here. After the breakout, stock rallied to the price objective, failed to reach the price target, sharp pullback, hard retest that dipped below the pattern boundary. If you have a really tight stop loss, this got you stopped out. If you have slightly loose stop loss, this didn't get you out. The next move on the upside this time reached the price objective, and this was considered classified as type 3 breakout. Now another type 3 breakout, a recent breakout from a 3-month long rectangle, Monster Beverage from US. 1, 2, 3, 4 tests, and then the breakout takes place. Stops below 52.4. During the sharp pullback, most probably many got stopped out unless you had a wider stop. And then the next move on the upside, if you have a re-entry strategy, you were able to capture this move on the upside that went towards the price objective. So this is a type 3 breakout. Again, considered a successful breakout, but if you're playing with tighter risk management, aggressive risk management, probably you need a re-entry strategy to capture the following move. Rectangle failure, breakout confirmation, a stock from Turkey, lows, minor low was the chart pattern negation. The stock tried to hold here. After trying to hold above the boundary, it failed, reached the chart pattern negation, and as far as I remember, it reached the lower boundary of this pattern and tried to rebound from there. So chart pattern negation was reached, and the stock didn't recover from there to give us a type 3 breakout. We're looking at symmetrical triangle. Remember that symmetrical triangle was a successful pattern this year against the 6-year average. So this was an energy company, 3-month long symmetrical triangle completed on the downside, and then after that the stock just resumed to the price objective with slight rebounds, nothing that came close to the pattern boundary. So this was considered a type 1 breakout, and it was a successful move. Now let's look at the type 2 breakout. Sierra Wireless from US, 15-month long symmetrical triangle, 1, 2, 3 tests, breakout confirmation. Following the breakout confirmation, stock rallies, pulls back, During the pullback, chart pattern boundary was not breached on the downside, so this is a type 2 breakout. Price continued higher to reach the price objective, and chart pattern negation at 14.9, stops are slightly below 19.7, giving you a good upside potential here to capture minimum 1 to 3 move on the upside. And we have another stock that was a symmetrical triangle that failed, reached the chart pattern negation level, and couldn't recover above the pattern boundary after that. So this was considered a type 4 breakout from symmetrical triangle. The last one of the head and shoulder top variety, we didn't have one or two or even three, so I'm featuring a type 4 breakout for head and shoulder top. So the left shoulder, head, right shoulder breakdown takes place here, and following the breakdown, chart pattern negation level is the high of the right shoulder. It is reached, so the pattern was a failed breakdown. So these finalize the review of the chart patterns that we have featured, not all of them, obviously. If you want to review all of them, it is under the breakouts page. All the chart tables, or all the tables are updated with the most recent data. And also the charts are posted as well. So if you have any questions on those, you can send me an email. But now I will take some questions. Last year you said 2022 was the most difficult period for breakout trading. Of the last 6 years, many breakout trades implement sit-out periods where they stop trading in adverse market environments. Others use progressive exposure to size up or size down based on how well breakouts are performing. Do you use either of these tactics? No, I haven't studied or used those tactics. It's kind of difficult to be able to time the market phases. Though I have used the long-term averages to take advantage of more bearish chart patterns versus more bullish chart patterns in terms of picking the trades and entering those setups. In example, rectangles that form below the long-term average were short opportunities, and I favored those versus any symmetrical triangle or head and shoulder continuation that is completing on the upside. So in a downtrend, I favored more of the downward breaks, but I haven't used or changed exposure size depending on the market phase. Question 2, on type 3 breakouts, are you getting stopped out and then re-entering? No, I have adopted the rule to basically not re-enter those type 3 breakouts. So my subset in terms of success rate for those chart patterns are over 6 years, around 47.7% subset. So I'm working on that range and trying to maximize the upside potential by playing it tighter if needed. Question 3, it seems like some of your setups are based on the profit target and where your stop or pattern negation level are placed, that your risk reward ratio is less than 1. Can you clarify some of those charts, and if you're taking these trades, or if you are charting what you see on the chart? I have clarified this in the beginning of the presentation, that chart pattern negation is not a stop loss. So stop loss can be tighter, and that would give you a bigger upside potential. Julene will be able to provide those links where I have discussed in educational videos that shows how to place a tighter stop loss given the chart pattern price objective to be able to capture the most out of a pattern breakout. So this, I'm sure it will help you, those educational videos. I think there are easily 3 or 4 of those that are under the premium section. Question 4, do you use a trailing stop once price action has moved towards your price target favorably to avoid a loss on something that has moved so much in the favorable direction? Yes, I do with type 1 breakouts, only with type 1 breakouts. And how do we realize that I'm riding a type 1 breakout? Type 1 breakout will break out and rally to the price target. As you get closer to the price target, let's say close to 75% to 80% of the price objective, then you can start implementing an ATR based trailing to basically ride it past the price objective to capture even more than what you have initially measured as the upside risk reward. Okay, question 5, where are you placing your stops on the chart patterns you use, like head and shoulder, rectangles, cup with handles? Any stop loss, any protective stop loss should be placed right below the chart pattern boundary when the breakout takes place. When the breakdown takes place, it is above the chart pattern boundary. How high or high-low you want to place it will depend on how aggressive you want to manage those trades. If you place it very tight, you will get stopped out on type 3 breakouts that pulls back sharply and tests below the pattern boundary. If you place them too tight, you will be able to capture type 1 and type 2 breakouts that doesn't challenge the pattern boundary, but then your success rate will go from 55% or 59.2% to 47.7% over the 6 year. So it's a trade-off. Question 6, what are your thoughts on the current formation of the gold chart? I see a confirmed double top on the daily, but the pattern is small. Would you think it's too small of a pattern to trade? Thoughts on the position? I'm looking at gold from a little bit longer term perspective, which I'm posting the weekly scale and monthly scale price charts. And today is May 24th. That means we have a couple of more trading days on the monthly scale price chart. If the monthly scale price chart gives us a long upper wick, then it will be the second month that we are seeing a long upper wick, which means that sellers have taken control of the price around 2070, and that can easily pull us back all the way to 1800s. So the price can come down a little bit more from current levels. I'm not sure about the next support level, but right now I can say that the price have found resistance, and right now the sellers are having the upper hand. Tech Charts members, you have always access to me via email, so I'm happy to answer your questions whenever you have a chart-based question or a market-related question. Please feel free to send emails. Sometimes on social media, on Twitter, I might not be able to capture all your questions because the timeline keeps on moving, but emails will always be captured and I'll always have the chance to reply to you with better content, better detail via email. Thank you, everyone. Have a good day.
Thank you, Aksel. As we close this member webinar, I want to remind you about our Discuss platform that's located at the bottom of all Global Equity Markets reports. To find this section, go to Premium Members, Premium Reports, and click on any report. Scroll to the very bottom. Here you'll find the Discuss platform. Feel free to share any ideas or questions you have. There's the additional feature to be able to upload a chart. I also want to draw your attention to our educational video library under Premium Members, Educational Videos. And then all videos are organized under the subjects in this header row. Again, if you have any questions about your membership, feel free to contact me. And you can do that by clicking on the Contact under the Support tab and then fill out this form, and that goes directly to me. Thank you very much for watching. We hope you have a great rest of your day, and thank you for being part of the Tech Charts community.